Now, in AS11 there are three topics. One is the foreign currency transaction. Second is the financial statement of foreign operations. This already we have covered. Integral, non-integral, that already we have covered. So that is already covered. And the last one is forward exchange contract. This forward exchange contract, once again, from my point of view, questions should not be asked, but they are asking. But there is only two questions. I will explain that out of the two, one question they will ask, and that both questions they are asking in exam. Okay. Important one is what foreign currency transaction. Any transaction which is in foreign currency, how to translate it and how to record it. So suppose you have done sales in dollar, so we need to record in rupees. So at what amount it will be translated, by using which exchange rate. So for that, what our AS11 says that there is two recognition. One is initial recognition, second is subsequent recognition. So initial recognition is done at transaction date exchange rate or average rate. Means from examination point of view, if transaction date exchange rate is given, to use that rate. If that is not given, then you need to use average rate. So initial recognition is done at transaction date exchange rate or average rate. Very simple. Now subsequent recognition means what? Either on settlement date or on reporting date. Settlement date or on reporting date. For example, suppose you have done one credit sales यहाँ पर, and before settlement there is one 31st March and settlement done यहाँ पर. So subsequent recognition be done at this point of time as well as this point of time. It is quite possible you have done credit sales यहाँ पर and before 31st March settlement done. So there is no 31st March. Correct? So subsequent recognition can be on reporting date, means on balance sheet date, as well as on settlement date. For that purpose, what our AS11 says that all types of item, means all types of assets and liability are of two types. One is known as monetary item, second is known as non-monetary item. Because right now we are dealing in foreign currency item. It is foreign currency monetary item, foreign currency non-monetary item. Foreign currency item, foreign currency monetary item, foreign currency non-monetary item. So any monetary item which is denominated in foreign currency is foreign currency monetary item. Any non-monetary item which is denominated in foreign currency is foreign currency non-monetary item. So it means we need to understand first what is monetary item, what is non-monetary item, what is monetary, what is non-monetary. In simple word, right? Don't go into definition. Listen whatever I am saying. Then you need to give all examples by putting hand. If you are saying correct, means you have understood. So any receivable or any payable, which are realized in cash, which are to be settled in cash. Cash include checks also, but cash does not include cash equivalent. Cash is different and cash equivalent is different. Are you getting what I am saying? So cash include cash and payment in checks also, correct? So which are realized in cash, which are settled in cash, means in currency. In simple, but if I'll say it is settled or realized in currency, it become monetary item. Apart from that, all asset, all liability will be non-monetary item. Understood? Hint I have given. Now just hide it. I can't hide it. Very good. Chalo. Now you'll say me, cash at bank, cash in hand, bank loan, FD, debenture, स्टार मार्क. डाउट आया. इनकम रिसीवेबल, प्री रिसीव्ड इनकम, what you are saying? Star mark. Expense payable, prepaid expense, star mark. Redeemable preference share capital, star mark. What you are saying? Both answer coming na, star mark. Equity share capital, equity share capital, doubtful. Investment debenture, MI. Investment equity shares, Doubtful. Inventory, doubtful. PP, huh? Intangible asset, investment property, advance from customer, advance to supplier. So this I was knowing you will do mistake. Whatever mistake is genuine mistake. Okay. But a 5 marks question can be asked, or a multiple choice question of 2 marks can be asked, whether it is monetary or non-monetary. Correct? Now, debenture, whether it is redeemable and payable in cash or not. So therefore it is monetary item. Okay? Because it is payable, settled in cash. Settled in cash. Okay? Now, pre-receive income means what? Suppose I receive some income in advance. So that will become pre-receive income. But that will be settled in cash or in goods or services. In goods or services. So that will not be settled in cash. That will be settled in goods or services. Therefore, it become non-monetary item. Understood? Correct? I said which are realized or settled only in cash, not in goods or services. So if I receive some advance from you, that become my pre-receive income. So what I will deliver? I will deliver services to you now. I will give you cash. I'll give you services on behalf of that. So it is not a monetary item. So it become a non-monetary item. Similarly, prepaid expense. If I paid some expense in advance, that become prepaid expense. So I will receive what? Goods or services. Therefore, this is also non-monetary item. Redeemable preference share. Redeemable, it will be settled in what? Cash. Therefore, it become monetary item. But can I say equity share capital will never be redeemed, will never be settled, and therefore it will be always what? Non-monetary item. Non-monetary item. This is to asked many times in exam. Equity share capital. Equity share capital will be non-monetary item. If suppose in exam they give us share capital, we will assume it is equity share capital. If they have given only share capital, we'll assume it is equity share capital. Understood? Yes, sir. Investment debenture. So of course, debenture, it is my investment. So of course, it will be realized in cash only. If the debenture means borrowing will be settled in cash, so investment will be also settled in cash. It is monetary item. So this may no doubt. And investment equity share, can you say here also nothing will be received? Nothing will be received. Correct now. So it will be a non-monetary item. Not non-monetary item. Understood? Inventory, but it is monetary, non-monetary. Monetary, non-monetary. Monetary, but whether it is to be realized in cash? No, Ray. It will be sold, then debtor is realized in cash. Right now, inventory. Then so this PP is also realized in cash. If you sell it, some cash will come or not. If this is PP, then it also become realizable. I can sell it at any point of time. Correct now. So inventory and PP are same. These are non-monetary items because till now it has not been sold. Once it becomes sold, it becomes debtor. Debtor is realized in cash. So inventory here, so I will say all final students also don't know this. Correct now. I asked in final they will say what? Monetary item. It is non-monetary item. Kasam kao, it is non-monetary item. Inventory, PP, intangible asset, all are non-monetary item. Understood? Yes, sir. Correct. Now you say advance. Now if you have understood, you say me correct. Advance from customer. No, understood the concept. Now you are saying correct. Now you are saying correct. Non-monetary item. Advance to supplier. No, now you have understood. So understanding is important. Ratification will never do. Once you have understood, all item you can answer. So this is 1, 2 marks or 4 marks question in exam. 2 marks or 4 marks. MCQs में 2 marks can be asked. Highly expected in MCQs. No, the investment in what investment in equity shares, once you invested, correct now. So whether any contractual right to receive cash, there is no contract. Dividend may or may not be declared. Dividend may or may not declared. I just don't want to go into the depth, but there is no contractual right to receive. It is sold. Then so anything can be sold now. Inventory can be sold. Investment can be sold. So if it is sold, then realizable. So right now nothing to be received. If investment is kept, there is no contractual right to receive cash. But debenture, there is a contractual right to receive cash. Understood? Correct? Doubt. Ask me. पूछना First, income receivable. Income receivable means I have given services to you. Now you have not paid. So this is income receivable. So I will realize cash only now. It is what income receivable. So it will be settling cash only. What I will receive? Cash only. If suppose contract has been done, goods and service received, then it will not happen. But normally income receivable, yeah, any debtor, it is just like debtor. Any receivable, if question is silent, what do you receive? You receive cash only. If they have said it is receivable in goods and services, then it is not a monetary item. But if question is silent, what you will assume? Cash will be received. Advance to supplier. Now, if you have given some advance to supplier, what you receive? Cash or goods or services? So it is what? Non-monetary item. Non-monetary item I have written. Very good. So typo mistake. Correct it. Typo mistake. This is typo mistake. Copy paste. Redeemable preference share capital. Redeemable, it will redeem. Equity share cannot be redeemed. Whether it is that is become convertible preference share capital. Then it is not redeemable. I say redeemable. If it is convertible preference share capital, it becomes non-monetary item. Okay. Now you can understand now by your own. If it is convertible preference share capital, then it is non-monetary item because it will not be settling cash. You can give any example. Create any example. Once you have understood, you can say monetary, non-monetary. Now I'll give you some example. High level example. You want high level example? Chalo. High level example. Batao. If I'll say in this way, convertible debenture. Non-monetary item. Look, done. But I know this type of question they will not ask. They will never ask. Okay? Batao. Provision for tax. Payable in cash na re. Think and say na re. Okay. Now think and say. This type of question will never ask because you challenge me, so I am asking. Okay. Batao. Provision for legal damages. Provision for legal damages. Think and say. No, uncertainty, certainty not. Whether I said certainty, uncertainty, I have not said it. If you go into definition, what they have given, which are received fixed or determinable, it can be estimated also. It can be fixed, it can be estimated also. Correct? But the provision for legal damages, monetary, it is monetary. But if I say provision for warranty, why? Because in that goods, it is replaced. Provision for warranty means they will never pay cash. They will repair the goods. Chalo, high level example, they will never ask. Chodo. Understood? Concept you understood? Yes, sir. Now come to this. So if it is foreign currency monetary item, now you understand monetary item? Debtor, creditor, receivable, payable. These are what? Foreign currency monetary item. This will be always translated by using closing exchange rate. Closing exchange rate. Understood? This will be translated by using closing exchange rate. Understood? If it is foreign currency non-monetary item, so what our AS11 says that if it is carried at cost, no translation required. So if PP is carried at cost, no translation required. But if it is carried at fair value, means revaluation model, then translate by using the exchange rate when the revaluation was done, means when the fair value was determined. However, till now they have not asked this point in exam. They are asking this point in final level, but they are not asking in CA inter level. So you should only remember this much: if non-monetary item carried at cost, or if question is silent, it will be always carried at cost. No translation required. No translation required. Understood? Understood? Chalega? Or we can say by using purchase date exchange rate. That only we have done in what integral foreign operation. If no translation required, means as per initial recognition date rate, means initially you have translated by using some rate, that rate only will be used. Understood? Have you understood this point? Due to this translation, any difference happen, that difference will be transferred to exchange difference. That can be gain, that can be loss, that will be transferred to profit and loss account. This is the concept. Let me take some questions. What type of question they are asking? Chalo. First, let me take a simple question. Goods purchased on 1/1/2007 of $10,045. But what will be journal entry on 1/1/2007? On 1/1/2007, what journal entry? Can I say you have purchased inventory, or normally we write down purchase account, but this is nothing but inventory now. Purchase account debit to payable. Payable means creditor. So this is the journal entry. At what rate? 10,000 into 45. So we'll do 10,000 into 45. How much? 4,50,000. 4,50,000. This is the transaction reduction rate. Then what is given? The exchange rate on 31st March become 44 and date of actual payment on 7/7 become 43. So first will come 31st March. So come to 31st March. But the inventory is monetary, non-monetary. So whether translation required? No translation required, because that will be translated by using transaction reduction rate only. No translation. But credit is what? Monetary item. So we'll translate by using closing exchange rate. So what is the closing exchange rate? Now it become 44. So initially it was 45. Now it become 44. So your liability decreases. It become gain or loss. It become gain. So what journal will do? Creditor will reduce to exchange gain, transfer to PL. So that will be 10,000 into 1 now. 1, so that become 10,000. This will be journal entry. That become your exchange gain. Correct. Now actual payment done on which date? On 7/7. So 7/7. Now payment done. So we'll say creditor account debit. Now creditor is coming at what? 44. So we'll say 10,000 into 44. How much? Now it is coming at what? 44 now. We have translated it. What is the book value? Book value is 4,40,000. But payment will be done at which rate? 10,000 into what? 43. The payment will be done at 43. It will be 4,30,000. Once again, what is the exchange gain? Exchange gain will be transferred to PL. How much? 10,000. It means they will ask you what is the gain of first year. What is the gain of 7/8? This is the gain of 10,000. And what is the gain of next year? 10,000. So there are two gain. Gain of first year 10,000. Gain of second year 10,000. Understood? Correct. So this type of question, in multiple choice question, they will ask what is the exchange gain of second year? You write down 20,000. No, it is 10,000. So read the question carefully what they are asking. Got this point? Then a similar question is there, you can do it. Chalo, next concept में आते हैं. There is one concept, very super concept about para 46A of 11. This you know, from which they are asking question. Now what para 46A says that, abhi right now what we have done ki any exchange gain or loss will be transferred to PL. But para 46A has one exception. Para 46A says that some exchange difference can be capitalized. Some exchange difference can be capitalized. But this is an option given to the entity. Means either entity may opt that exchange difference will be transferred to PL, or they may opt para 46A. So if they have opted para 46A, what is the rule that we need to understand? Correct? Means what is the option? Just try to understand. Para 46A says that this is an option given to the entity. So either they can opt exchange difference will be transferred to PL, or they may opt exchange difference can be capitalized. So for this, they say कि foreign currency monetary item are of two type. One is short-term foreign currency monetary item. If it is short-term foreign currency monetary item, then exchange difference will always be transferred to PL. It will never be capitalized. So any short-term foreign currency monetary item, what is short-term foreign currency monetary item? Which are realizable or payable within 12 months. Which are realizable or payable within 12 months. That is short-term. So for short-term, there is no capitalization. So capitalization is permissible only for long-term. So if it is long-term foreign currency monetary item, now in this, they are of two types. Either it may be related to acquisition of depreciable asset. So in this case, what they are saying, any exchange difference on long-term foreign currency monetary item will be capitalized to the cost price of asset. So this will be capitalized to the cost price of asset. Capitalized to the cost price of asset means any exchange loss will be added and any exchange gain will be deducted from the cost price of asset. Understood? So when I say capitalize, it does not mean only loss will be capitalized. Gain will be also capitalized, but gain will be deducted from the cost price of asset. Understood this point? But if it is not related to the acquisition of asset, means it is not related to the acquisition of depreciable asset. It means it is related for some other purpose. It can be for any other purpose. In that case, whatever exchange difference of long-term foreign currency monetary item will be accumulated to one special account, that is FCMI TD account. FCMI TD account. Full form is what? Foreign currency monetary item. TD means translation difference account. So foreign currency monetary item translation difference account. It will be accumulated in this account. Correct? It means in this exchange loss will be debited and exchange gain will be credited. Means this account may have debit balance or credit balance, and this will be amortized to PL on SLM basis. It will be amortized to PL on SLM basis. So it will be amortized to PL on SLM basis during the life of long-term foreign currency monetary item. Suppose you have taken some foreign currency loan and the tenure is 5 years. So this will be amortized in how many years? 5 years. To PL on systematic basis. This is the concept. This FCMI TD account, the balance unamortized portion will be shown under the head reserve and surplus. Will be shown in the balance sheet under the head reserve and surplus. This is the entire concept. Now suppose question is silent. Question has said nothing. Whether they are opting para 46A or they are not opting para 46A. So you need to give both the point. If they opted, what is the answer? If they have not opted, then what is the answer? Not opted means entire exchange difference will be transferred to PL. Understood? Let me take one question. This question is very good question. I like this question personally. A Limited borrowed US dollar 10,000 in foreign currency on 1st April 2001 at 5% per annum annual interest and acquired a depreciable asset. Understood? Depreciable asset. The exchange rate are as under on 1/4/2001 when the loan was taken 48, 31st March 2002, balance sheet date is 51. You are required to pass journal entry in the following cases. Option under para 46 is not availed. Understood? So first journal entry was bank account debit to foreign loan. So how much? 10,000 into 48. So for 4,80,000, 4,80,000. Then interest expense will come. So interest expense will be what? 5% of 10,000. 10,000 into 5%. How much? It is 500 into 51. How much? 25,500. What is journal entry? Interest expense account debit to cash or bank. So interest expense account debit to cash or bank. 25,500. Now this foreign loan is a foreign currency monetary item. And you can see 48 become 51, so your liability increases. So exchange loss, because para 46A is not opted, it will be transferred to PL. So your exchange loss account debit to foreign loan account, you can see how much the difference? 3 rupees. So 10,000, 30,000 will be transferred to PL account. Understood? First is very easy. Second, option under para 46 is availed. So first journal entry and second journal entry will be same. First journal entry and second journal entry will be same. Now only the last journal entry. Now exchange loss will be capitalized to the cost price of PP. Whatever we have purchased, so journal entry of PP account debit to foreign loan account. Or you can pass two journal entry. First exchange loss to foreign loan account. Then exchange loss will be capitalized to PP. To PP account debit to exchange loss. You can pass two journal entry. So what they have done? I think they have done two journal entry only. This is थोड़ा सा not मतलब okay, so foreign exchange difference account debit to foreign loan account and then PP account debit to exchange difference account. You can do in this way. Or better pass one journal entry PP account debit to foreign loan account. Chalega. If the loan was taken to finance the operation of the entity, that is not for the purchase of depreciable asset. Means once again, first two journal entry same. The last journal entry what? FCMI TD account to foreign loan account. FCMI TD account. You can see they have transferred entire to FCMI TD account. Correct? Or they have done two journal entry. First exchange loss to what foreign loan account. Then that exchange loss has been transferred to FCMI TD account to exchange loss account. Correct? Understood? So this can be one popular question. Similar question number 10 now you can do by your own. This type of question nowadays they are asking in multiple choice question also. This type of question can be asked. Okay, sir. Done. Then foreign operation already we have done. This is integral foreign operation, non-integral foreign operation, same thing we have done. In this now they may sometime ask indicator of NIFO as a theory question of 5 marks. So this you do by your own. Indicator of NIFO when foreign operation will be NIFO. So they have given some indicator. They may ask a theory question. Okay. Then last point of this chapter is forward exchange contract. Forward exchange contract. I said should not be asked, but there are two questions that I will explain. I will explain that two questions only. The topic says what do you mean by forward contract? Any contract which will be settled in future date is forward contract. Means it is nothing but executory contract. And if that contract is done in foreign currency, that becomes forward exchange contract. Suppose I have done one contract to purchase $10,000. After 6 months, it become a forward exchange contract. However, this is a topic of CA final level. In AFM, there is one separate chapter, and for that is a heavy chapter. In accounts, we take 2-3 days to explain this. To explain this, we take 2-3 days, means 3 to 6 hours. Correct? So this is actually not a topic of CA Inter. They should not ask, but they are asking what to do. Now in this they are asking Miss can come in your exam. So there are two topics. Either the forward exchange contract may be for hedging purpose. Hedging purpose means to minimize the risk. To minimize our risk. That is known as hedging. Or it can be for trading purpose. Trading purpose means to generate some short-term profit. To generate some short-term profit. Let us come directly to question. In this much you might not read. I just need to inform you what type of question will come. So first, question 4. They will say Ram purchased a plant of $1 lakh on 1st Feb 2001 payable after 3 months. Means you can see in this there is a liability. They purchase a plant and they need to pay some amount after 3 months. So there is one foreign creditor, या foreign currency payable. Whenever there is some liability, this is a question of hedging. This is a question of hedging. Understood? Because if you are supposed to pay some amount of dollar and dollar rate increases, there is some risk. So you will try to minimize that risk. That is known as hedging. So I hope you have understood that whenever they have a liability or they have some foreign debtor, it is a question of hedging. It is a question of hedging. For that purpose, company enter into forward contract for 3 months at 49.515 per dollar. So they have entered into a forward contract to purchase dollar at what price? $49.15. Exchange rate per dollar on 1st Feb is 48.85. So they have entered into one contract that they will purchase $1 lakh at 49.15 after 3 months. But today rate is what? 48.85. So how much extra they are paying? So 49.15 minus 48.85. how much extra they are paying per dollar? 0.30. This is known as premium. This is known as premium on contract. Premium on forward contract means you are paying some premium for minimizing your risk. It is just like when you take insurance cover, you pay some premium now. So it is also covering your risk. You have paid some premium. Premium is what? 0.230 per dollar. And they are purchasing how many dollar? $1 lakh. $1 lakh into 0.30, how much? 3 lakh. 30,000. This 30,000 will be spread in the tenure of contract. So but this was when? 1st Feb for 3 months. 3 months means how much? It is 38 April now. 3 months 38 April. So out of this 2 months is falling in one financial year and 1 month is falling in next financial year. So this 30,000 will be allocated in 2:1 ratio. Means 20,000 will be the loss of first year and 10,000 will be loss of second year. This is the answer. Means what you do? We call it forward rate. This rate is known as forward rate. Forward rate minus spot rate. Spot rate means current rate. Forward rate minus spot rate, current rate. The difference is premium multiplied by dollar. This will be spread. This loss will be spread over the tenure of contract. Tenure of contract. And so this is the answer. Second question. Mr. brought forward contract for 3 months for $1 lakh on 1st December at 47.10. You can see in this also they purchased $1 lakh at 47.10 for 3 months. But you can see in this there is no liability. There is no foreign currency liability. There is no creditor. There is no debtor. It means it is a question of what? Trading purpose. Means you intend your contract to earn some profit or loss. Means for some short-term profit. Means we call it speculation purpose. So this is not a question of hedging. It is a question of trading. It is a question of trading. So you purchase at what price? 47.10. After some time, when the exchange rate was 47.02, means you purchased $1 lakh at what price? 47.10. On 31st December, when he closed the books of account, the rate become 47.15. You only say, abhi you purchase some $1 lakh at 47.10. Now the rate become 47.15. It is a gain or loss? Gain only. So 47.18 minus 47.18 minus 47.15. How much it is coming? 0.03. Correct. Then on 31st Jan, he decided to sell the contract at 47.18. So can you say 47.15 and you have sold at what? Sorry. My mistake. Let me draw it. In this way, I can't explain. But initially, what was the date? On 1st December. What was the rate? 47.10. Then on 31st December, what was the rate? 47.15. And they have sold at which date? 31st Jan. The selling price was 47.18. So, but at this point of time, what is the gain? 0.05 into what? 1 lakh. So you recognize the gain of 5,000. Here what is the gain? 0.03. The gain is what? 3,000. Total gain is what? 8,000. However, they are calculating total gain. If suppose they ask what is the gain of first year, what is the gain of second year, so you should do in this way. But suppose they are not asking what is the total gain? 8,000. So you can calculate in this way. Same question will be asked. Just revise these 2 questions before exam. 4 marks, 5 marks, 2 marks question can be asked if they ask in MCQs. Okay. This chapter is completed from